Hello, people. Thanks for tuning in. I'm African Rebel, and this is where we guide traders from foundations to freedom. In this video, we'll be talking about inducement and why it is referred to as a smart money trap. So, in this video, we'll be covering the definition of inducement. We'll be looking at criteria to identify a valid inducement, and finally, I will be breaking down a trade to show you guys how effective inducement is in our day-to-day trading. Without wasting much of our time, please, if you're yet to subscribe to our channel, please don't forget to hit the sub button. Don't forget to like the video if you enjoy the content. Please say your comment in the comment section and let's get started. So people, as we can see on our screen, inducement is an act or a thing that is intended to make something happen or to persuade someone to do something. Alright, so inducement is a thing that is intended to make something happen or to persuade someone to do something. So I think this definition alone explains why it is referred to be a trap in the market. So let's open our chart to get to identify and know how to deal with them. Alright people, so from our definition, we got to understand that inducement is a thing that persuades people or someone to take an action or to do something, right? So for those of us that trade smart money, or for those of us that trade smart money concept, right? What we know on the basics is that we look for price to either give us a break or a sweep, right? So when you have price interacting with a previous swing point, like causing a break of structure like so, we look for price to pull back to mitigate a thing or something. Those things that give us that reason to take the action of executing the trade, they are where the inducement lies. All right. So based on smart money, we call them what internal liquidities because they are found at what the impulse that broke this structure. Once again, our definition said was a thing that makes someone or that persuades someone to do something, right? So for some people, this thing here, this thing that we always wait for price to pull back to, for some people is an order flow, for some traders is an order block, for some traders is FVG, for some trader imbalance, for a lot of things. We know the arrows that we look for price to pull back to, then we can be able to sell, right? Some people even take it to be what support and resistance. Some people take it to be supply and demand, right? So those things that price pull back to, they are the things that give us that uh, persuasion or confluence to be able to execute our trade, right? Now, when we go into our concept, the smart money concept, and we talk about inducement, inducement in the smart money concept is always the first significant pullback, right? The first significant pullback. Always the first significant pullback that originated a break of structure. So this is a previous structure, a previous low, right? And now we have a break of that low, creating a lower low, right? Now, if we look at this impulse that broke through this previous low, the first and only significant pullback is on this guy, right? It is on this guy. Some people will call it what? Order flow. Some people will call it order block. Some people will call it supply. Some people will call it support, and whatever you call it. The first significant pullback here is what is referred to as an inducement. Sometimes you can find more than one of them. Sometimes you can find one of them. We're going to dive more into other examples, but for now, we want to start from the basics, right? So the first significant pullback that you get after a break of structure, it is what is referred to as the inducement. And just like the definition says, it persuades people into doing something, right? And we also know that those things we look at price to pull back to after break of structure, they persuade us or give us the confidence to what execute our trade to take, to join the trend. So why is this one inducement and why is it called a trap in smart money? It is called a trap in smart money because it is also referred to be what internal liquidity. And market, we understand from trading smart money that price is always structure and liquidity, right? So if it's only one pullback here, price will definitely not, uh, react on it and play out unless it is taking some other inducement here. Because the market makers know that people that trade smart money will definitely look for supply and demand, support and resistance, look for order flow, look for order block. So the first ones, the one that are the first one there, price will always invalidate it, no matter how much it reacts. Sometimes you see people execute on the first one, then price will give a play around, and then it will be something like so. because it is the first one, it is always liquidity. It is always liquidity. So the fact that when people execute here and you have price going their way is because a lot of people have fallen into that trap. The market makers always keep the first pullback, the first significant pullback as a trap. So if you see people execute and price going their way, it means that a lot of people put their money on that particular level or at that particular level, and that is why they were able to move price a little bit. But it is only going to be a reaction. There's nothing that is 100% in the market. Sometimes the first one will definitely play, but if you try to dive into looking either into the lower time frame or the higher time frame, you get to understand why it will play out from there. All right. So that is it for simply identifying inducement. It is simply what the first significant pullback after a break of structure. So we have this structure broken like so, right? So we have this structure broken like that, break of structure there. We have break of structure there. This particular guy is an inducement. So whatever other block I find here, whatever FVG I find here within it, whatever other flow I find within it is only going to be there to trap new SMC traders who don't understand that the first pullback is always liquidity. All right. So whatever is here, whatever gives me that inducement, that persuasion to execute a trade here is definitely going to be an inducement. So we have this break of structure, we have this inducement. Price will always come to sweep it, and then from here we can get to start. We can start to figure out something that price will come to mitigate. Sometimes you get other blocks, sometimes you can get other flow, sometimes you can get FVG as well, whatever PDR range you like to look at. And sometimes price will only sweep the liquidity. You understand that liquidity sweep when price push up, when above, will come back to close within it. For those of you who watched my previous video, you should be able to understand or to tell what a liquidity sweep is, right? And if you have not watched it, please check the previous video to understand what a liquidity sweep is. So it's either after taking the inducement, it's either price does what? Price come to it's either price come to it's either price come to mitigate something here, or price just sweep the liquidity and give us a change of character on a lower time frame for the continuation. For that again, we have what? Break of structure again. Price broke structure, and literally just like the previous example, we have what? Another inducement here. Price took the inducement, mitigated something here, or just swept the inducement and then broke structure to the downside again. So we have this as a break of structure again. Now this is where it becomes a little bit advanced, because you can see that after this inducement was collected, right, from this previous break of structure, let me write it in. From that previous break of structure right there, after that inducement was collected, let's put it at the dollar sign. So after that liquidity or inducement was collected, it's an internal liquidity because it's at the internal ends of the overall structure, right? So after that liquidity was collected, you can see that price would drop significantly without creating any liquidity within or any inducement within. Price didn't create any inducement. Now, for some people, they would think it will just pull back to premium or discount and whatever and then drop, right? But now, if you have this type of scenario, it means that the inducement have shifted from this particular inducement to be this inducement. It has shifted from here to here. It means that until price comes to grab that particular inducement and maybe mitigate something here that has been kept unmitigated, or just sweep it, price is not supposed to what? Price won't have the momentum to keep going down. So this is what is simply referred to as liquidity shift. So you have this price broke structure like so, took this inducement, right? Price went up, collected the inducement, right? And now it significantly breaks a structure. This is not going to be referred to as a break of structure because it did not create any liquidity within it. Our break of structure is still here. Okay, so when we hop on the chart, I'm going to explain this scenario more intensively for us to understand. So it will now be like our whole price structure will be like so: a low, lower high, lower low, lower high, lower low, like so. And then if price comes here, we have the lower high again, and then like so. So all of this movement here becomes one the moment this guy doesn't provide what? an internal liquidity or an inducement before breaking a structure. If price breaks a structure without creating an inducement, that break of structure is not valid. All right. So let's really look at an uptrend to get more illustration about these things before hopping on our chart. So we're going to use this one to talk a little bit more about how to identify significant pullbacks, because if you remember my definition about inducement, I said it is a significant pullback. There are a lot of pullbacks sometimes you get to find on the chart, but they are not significant enough to be what? Inducement. Just like the definition said, these things are there to persuade traders into taking actions, or they are there to persuade someone into doing something. So if that particular pullback is not significant enough, there is no baby SMC trader, there is no baby trader that will want to look at it or execute price from it. It has to be significant enough for traders to be persuaded by it to take action. All right. So just like we had the other time, we had a break of structure here. This is an inducement on its own. Mind you, there should be a structure like so. So this is an inducement of its own, right? And then price took the inducement, probably mitigated something here, and then we have a push. We have another break of structure like so. Price came down, just like the last example we had on the downtrend. This push broke through this high, but it is not a break of structure. Why? Because it did not create any inducement here. So the inducement has a lot of rules to play in our trading. Number one, it tells us or gives us a signal of where price should go. Because if you meet price here, you know that price has to come to the inducement. It also confirms the break of structures, and it also gives us confluences for execution. All right. So price broke through the high that was created before after the inducement was taken. Price broke through the high, but it is not confirmed to be a break of structure. Why? Because it did not create any inducement with the impulse that broke through the high. The impulse that broke through the high did not create any inducement. So our inducement will shift from here to here. This have now become our inducement. This guy have now become our inducement. So this is now the significant pullback here. So this was a push. This is another drop, right? Inducement created, and then we went up. Price came, took the inducement. You can see price took the inducement like so, and then price move, have this push, and then that, and then broke through the structure again. This is an inducement because this is the first significant pullback. This is the first significant pullback after the break of structure, right? Price again came through, took the inducement, either mitigated something or just swept the inducement. Price push up again, broke through a structure, created inducement here. Now, I want you guys to understand this. You can see that all of this inducement I've illustrated out to you guys is always within, right? This is right at the break of structure ends. It is right on the swing point or right on the swing point level. For those people who trade support and resistance, I think this is what I'll be looking, broke, retest and that. We call it inducement here. So it is right here. It is also still a valid inducement. So do not get it confused. The fact that I always put the inducement within the structure doesn't mean that all the time inducement should be there. The moment it's a significant pullback on that particular impulse that broke the structure, sometimes it can happen here, just like this ends. I'm going to explain when I get there. So the moment that it is a significant pullback on the impulse that broke through the swing point, it is what? A valid inducement. All right, so price took that inducement, price came back, take the inducement, either mitigated something or swept the inducement and then push up. All right, push up and then broke through this structure again. All right, now this is where it might be a little bit messy for people who are bluntly new to the whole concept. So we have this push, we have this significant drop, right? We have that push, we have this minor drop, that push, minor drop, that push, and a significant drop. Then continuation, right? Now, for this particular structure like this particular structure we have, always bear in mind that I told you guys before, pullbacks can be more than one on the impulse that breaks a particular structure. Pullbacks can be more than one. All right, but the one that is referred to be the inducement is the first, or you can call it the last. The last one here, or the first one closer to the market, the current price. It is the inducement. The one closest to the current price is the inducement. All right, this one is no longer inducement. On a different video, I'll go to explain what this is to you guys. So make sure you stay tuned. If you are not subscribed to our channel, please subscribe and let's keep the family growing. All right. So on this, for this example, this is the inducement. All right, because this is the last significant. This is the first significant pullback after the break of structure. Understand? After the break of structure. So the structure was broken here. After that, where is the first significant pullback? This one. These are pullbacks, but these are not significant pullback. These are pullback for a lesser time frame, or an internal structure. So this is a break of structure for an internal structure. This is a pullback for internal structure because of this particular internal structure. So sometimes you're going to find them, these little pullbacks there, but they are not inducement. They are not the relevant pullback. They are just going to be there as what trendline liquidities. All right. So I'm going to be explaining more about all of these liquidities I'm mentioning in subsequent videos. All right. So this is our significant pullback, and this is our inducement. The first significant pullback after the break of structure is here, this guy. So this is our inducement. So if price comes through it, and then we have something to mitigate here, just like price have created this supply and supply, sorry, demand and demand. Price have created all of that, so we can be able to buy from them, or maybe there will be an order block to filter out, or maybe FVG or something. When price comes through it, we'll be able to buy, continue the buys after price takes the liquidity. We know that it is liquidity that moves the market, and definitely there are new people coming into the industry every day. So people will definitely fall into all of these traps. That's why the market makers don't joke with them. Right? Now let's pay attention to this. This is the inducement, right? And this is the inducement, right? Based on what we have understood here. It is going to be only valid to be an inducement if this particular, the last ends of the market of the current market is significantly closed above the pullback, the swing that started pullback. If it just came to sweep, it is not an inducement. It is just equal high grab, or people that choose support and resistance. It's just a grab for them, and then price will reverse significantly to the downside, not even coming to mitigate something to become that M and W formation type. If price only swept that high that started the pullback, but if price broke above it, if price breaks above it and close significantly above it, then it is now an inducement. So if price swept this guy, instead of breaking, price just went above and closed below, this won't be the inducement. This won't be the inducement because these are minor pullbacks. This will be the inducement. The inducement will be this guy, because this is now the only significant pullback that we have had. And then you get to clearly see that the structure will become something like this. This the first M leg, the middle of the M, the sweep, and then this is the second M leg, which is what, this is the second M leg, which will come and grab what our inducement liquidity, and then we continue the uptrend. All right. So that's how it is. If for inducement to be valid, it needs to be a significant pullback, and it needs to be the push after the pullback need to close above, significantly above what the swing point that started creating a pullback. So that is how to identify significant pullbacks. Sorry, significant pullbacks or significant inducement. These are significant pullbacks, but they are minor to the major ones, right? You can see these major ones. So these are minor pullbacks for just this minor internal structure. So these are not the inducement. Even if this isn't valid to be an inducement, because maybe to create a sweep, this will not be my inducement. This will not be my inducement because these are just structure within. All right, and these are just trendline liquidity seated here. Definitely, there are people that will fall victim of trying to take trade from here. That is why the market is always moving, because people are always going to fall victim of every little thing that is being checked. People will try to buy here, people will try to buy here, right? If this is not confirmed to be a valid inducement, or even if price just started dropping like so, a lot of people will try to buy here, all right, and like that. So guys, I hope I've been able to explain a little of what an inducement is. Please don't forget to say or comment in the comment section if you have any questions to ask me. All right, if you have a contribution as well, I will be willing to listen to you and let us roll. If you're here to join our free Discord server, please look in the link in the description and join us for day-to-day trading ideas. All right, so let's quickly break down a trade that will further explain the importance or the effect of inducement in smart money concept. So this is volatility 10 index, right? And For those of you in the Discord, I'm sure you all remember this setup. Okay, so if you're yet to join our Discord, please look in the link in the description and join our free Discord server. So this was the setup I shared on the 15th of this month, right? So you can see price still in the same trend since Friday. So we had this particular trend since last Friday. Okay, today's Friday, so it's been there like so since 2 weeks now, I think. Or yeah, since a week now. It's 7 days now. So I said, well, price still in the same trend since last Friday. Though it's just swept inducement. You can see me, right, identifying the inducement right here. I'm sure you can see there's a pullback here, but price only swept, so this is not inducement anymore. This is just, a pullback. This is just whatever it is, but this is the significant inducement. This is a pullback. You can see this one is more significant. It's another pullback, but this is the significant pullback. So this is the inducement, right? So I said what? Price just swept inducement, though looking to short based on confirmation on the medium time frame stay highest. So people, if you want to join our Discord, please just look in the link in the description where we share free trading ideas on a daily basis within ourselves. Okay, so this is the VIX 10 and this is the 1 hour time frame. This is where I literally look at directional bias for those of you who have been following my channel. Okay, so let's look at the 15th. Let's look at the 15th, 5 a.m. So that was on the 15th, right? And you guys know how I look at the chart. When you want to understand the price movement, you have to understand what happened with the last swing, all right? The last current swings, what happened to them, and then you'll be able to understand what is currently going on. So you can see from here we have what liquidity taking. This is an inducement that have been taken. If I'm to zoom back it out, but it's a lot. So we have break of structure right here, and then price pullback. So when price pullback, you can see what price took what is significant. This is the inducement. This is a significant pullback. You can see pullback. It came back down. This is an inducement. Price took the inducement. Look for something to mitigate there. After mitigating that, it dropped. This is what this unmitigated candle shadow. Price mitigated that and then dropped. So when price dropped, we had another break of structure again, like so. Price broke structure like so, and then it started creating all of these pullbacks and pullbacks and pullbacks. So if I am to filter out the significant pullbacks on this guy, so this is a push down like so. We have a significant pullback like this. So all of these things here are significant pullbacks. And then we have this push down. We have this significant pullback here. This is a minor pullback. This is a minor pullback. We have this significant pullback. We have this is a minor pullback here, and then we have it like so. So this is what the structure looks like to me who understand the difference between what minor pullbacks and then significant pullbacks. Okay, so the first one, based on where the market is or based on current price, the first significant pullback is this guy, because this is our break of structure. Since price broke the structure, we have had this inducement, right? When price was just here. So this was the first inducement. Price came down, just created a little pullback, which is not a significant pullback because price broke through this internal structure. It created an internal inducement here. Price went to it. It just mitigated. It did not sweep it. Then it created a significant inducement again, right? So the more price goes, the more inducement shifts to inducement. So this was the inducement earlier when price haven't created this guy, and since it didn't come back to collect it, the inducement from here have shifted to be this guy. All right, so price went back down and then came now to collect this inducement. That is the ends. That is where the setup on the Discord was showing to us there. That's where the setup on the Discord was showing to us. You can see I told you guys that all of these are pullback, so that is why they are all marked out to be a trendline liquidity for me, because they are all uh, lower highs, lower highs, lower highs. So this is a significant pullback. Price went back down because of this internal break of structure here. That's why this originated. But on this time frame with this structure we are having, this is the next. This is the inducement. So inducement shifted from here. First of all, from here to this person, to this inducement, from this inducement now to this inducement. So if price comes to take this one, we'll sell just like price took it, right? If let's say price only stopped around here and dropped and didn't take this inducement, the inducement will shift from here to be this guy. So inducement is also dynamic, just like every other thing in the market. All right. So price took the inducement. You can see price came and swept. I was telling you guys from the illustration that sometimes price will only come and sweep. Sometimes price will come, mitigate something and drop. right? So for this, we don't have anything that was mitigated. For those of you who trade FVG, we can identify FVG here, but price didn't come to mitigate the FVG. You can see FVG is there. There's a gap between these candles and this one. So FVG is right here, but price did not mitigate FVG before dropping. It only went above our inducement highest point and then came through to close below it. So the moment it closed below it, those of you who understand how I execute my trade or how I take my positions, you can see on my screen where I took my position is right here, right? So let's go to the M5, which is the medium time frame, to explain a little bit about my entry to you guys. If you want to learn properly how I break down the chart, look in the link in the description and contact me for proper mentorship. This is the 5 minute time frame, which is our medium time frame. So from the 1 hour, we got a sweep here, right? So the moment we got a sweep, we know that it's time for what? For us to keep selling. So what we are looking for now is a change of character to tell us that yes, the trend on our medium time frame is also correlating with the trend of our directional bias time frame. So this is the push, right, that went to sweep structure on the 1 hour time frame. So this is the lowest low that originated that push. This is the lowest swing point. This is the swing point that originated that push that went to our point of interest. So when price comes through it, it becomes a break of structure. Sorry, yeah, it becomes a change of character because price have come through it. You can see we are having on this time frame, we're buying and buying and buying. Price was giving us this bullish move. So the when price came through the significant swing point that have sponsored a break of structure, it means we have now had a change of character. So we have a change of character here. On this impulse that change character, we can start looking for what our inducement again. So this is the inducement, right? This is the inducement. This is the first significant pullback. You can see we have this push, minor push, significant pullback down, and then we have a significant pullback here before this drop. This is our inducement, but we made the price here. Okay, we made the price around this level where price already has, played out all that stuff. But if I was there earlier, I would have been looking to execute based on what this order flow here. So I would have been able to execute my trade here. But the first entry already has been triggered and the price has already been, in profit, and we made price around here. So all we did was just to chill and wait around. So after that mitigation, taking inducement, mitigated order flow, price came again and then broke structure again. Price broke structure this time. There are pullbacks, there's liquidity, there's inducement. Like you can see here is our inducement. This is what this is this is the push down, like so. We have this minor guys, minor guys, minor guys. This is the significant one, like so, and then price came through it, right? Closed below. So price came and closed below, and then price went there. Price gave us an entry right there. All right. Price gave us an entry. I took the entry, but I ended up closing at break even because when price almost started interacting with the previous swing point, this is based on my trade management. When price started interacting with the previous swing point, I always go to break even. So I took break even on this trade, and then from there we just have to chill and wait for price to do something significant. What price did that made me execute a trade again is by going to take our major inducement. Price went and swept the major inducement. So the moment I got that sweep, I executed a trade here. The next candle after the sweep, and then the stop loss was right above the candle that originated the sweep. And then the take profit, we went back to the 1 hour time frame to determine our target. 1 hour time frame to determine our target. So the first take profit is supposed to be the lowest low, right? This low, right? But if you are like me, sometimes we just decide to listen to price to do what it wants to do first after taking partials though. So I took partial at the first take profit level and then just let the price roll. So I closed my trade overall 1:28. I think I closed my trade 1:28, and that is how the trade was. You can see how important inducement sweep is. So the inducement sweep signals the fact that price is going to drop. And you can see me when I went back to the lower time frame to filter entries, we're still paying attention to what inducement and inducement and inducement. So guys, I hope this video has been helpful. If you like the content, if you enjoyed the video, please don't forget to like the video. Please say your comment in the comment section. If you're here to subscribe to our channel, please don't forget to hit the sub button. To join our free Discord, once again, the link is in the description. Thanks for watching and stay highest.